Monday, November 28th, 2022, Maneco 64, home of alternative economics and contrarian views. Today, we're going to look at how a multipolar currency world, which is the way I think the world is going. In this world, gold will be the common denominator. When we'll look back, do a regression theory analysis of why that is so. Before I start, though, I like to look at some of the headlines, and the headline that is making the most news, of course, are these protests in China to do with the zero COVID policy. And I'm not going to dwell on it too much, but one thing I would say is that when we were having zero COVID policies in the West and countries like New Zealand and Australia, there's very little coverage of the protests that we actually saw in places like New Zealand. There were no calls for the Prime Minister of New Zealand to step down, that she was going to lose out. The people who protested were called COVID deniers. They were called anti-vaxxers, right? But this is why I'm saying that I'm going to keep a very, how can I say, open mind to what's going on in China. I know there are protests. I'm not denying that. But when you have publications like Zero Hedge, the FT, the Telegraph, and the Guardian covering the same thing and saying the same things, you need to take it with a big pinch of salt, I would say. In the Netherlands as well, when we had the farmers, when we had the Canadian truckers, their funds were frozen, of course. It wasn't called a COVID outrage. I'm going to stop at that in terms of what's going on in China. Back to the multi-currency world or multipolar world, where I think gold will be the common denominator. And I said that looking back the last 50 years or so, that we've had a world of fiat currency, of debt being really very easy to conjure up out of thin air, not backed by anything. That has been the exception in the last few thousand years, because if you go back, a few thousand years, the major reserve currencies are usually from the most strong country in international trade, with a hard currency or even a currency backed by gold and silver. But many times it was just gold and silver. And it was one of the reasons why the dollar is still the major reserve currency, is because at the end of World War II, the United States had like 2/3 of all the gold reserves. So it was the only currency out there that had the wherewithal to become a major reserve currency. Back in the 50s, 60s, the dollar was as good as gold. That's what the old saying was back then. And a lot of people still think that currencies are still backed by gold, believe it or not. They don't realize that we are in a fiat currency world. So that's why when you see news like we've seen recently, for example, between India and the U.A.E., as you can see here from the Gold Telegraph on Twitter, he's just reported central banks of India and the U.A.E., United Arab Emirates, are discussing the creation of a mechanism to engage in bilateral trade in local currencies. And they are also trying to expand their bilateral trade. Of course, their goal is to surpass 100 billion in the next 5 years in bilateral trade. There's a lot of Indians that work in the U.A.E. There's a lot of flow of funds, but what they're trying to do is save costs. That's what they say. But what they'll do is they'll be able to do this with their own currencies. They won't have to earn dollars to trade with each other. It's a no-brainer. Of course, we saw Ghana the other day. I spoke about Ghana wanting to buy their oil in gold. That's another thing. And why do I say gold is going to be the common denominator? Well, because like I said, the dollar, when it became the major reserve currency as a result of the Bretton Woods Agreement, was basically as good as gold. And if you look at fiat currency or paper money, it's always been an aberration in times of war. The countries have resorted to suspending convertibility of paper currencies into specie. It was to do with emergencies or war. We saw that during the Revolutionary War in the U.S. You got the Continentals, even though the Continentals were supposed to be backed by specie, they devalued greatly, and then they got rid of it, and that's why the U.S. Constitution says that only gold and silver shall be coined as money. They had the Coinage Act describing, setting out what a dollar would be in terms of silver and gold. The same thing happened in France. You had the period of the assignats in the 1790s, post-revolutionary France, that ended in disaster. The assignats and the mandats became worthless. Then Napoleon took over. What did he do? Well, he went back to gold, to specie, to real money. What happened in the UK as well during the Napoleonic Wars? Well, they suspended the convertibility. It was called the restriction period from 1797 to 1821. Yes, there was inflation in the UK. Then it wasn't too bad, but they went back to a sound money system from 1821 to 1914. And it's the only way forward. Hopefully, these countries that are doing these bilateral trades, the BRICS countries, realize that they need to have a common denominator. And this doesn't mean they're going to use gold as or silver as money, even though that would be great within their domestic economies. It just means that instead of holding dollars, paper dollars or treasuries as reserves, they're going to use gold, and they could use silver as well. And why is that better? Well, because gold and silver are not political. They're just neutral monetary reserve assets. And I think hopefully the world will realize how important that is. Am I saying this just because I want the price of gold and silver to go up? No, I'm saying this because that's the best thing that could happen to the world. And gold and silver will do what they have to do. But I think the fact that countries are realizing that that's so is going to make gold and silver and even commodities even more valuable, because what the US has done with the fiat dollar since 1971 is inflate the world with a lot of currency and credit. And poorer countries have had to keep following the dollar. They've had to keep inflating, and that's why they've had such bad inflation, even worse than the US. But I think what's going to happen now, and I think Peter Schiff talks a lot about that, when this system unravels, the dollar system, I know the first Bretton Woods is gone, but this fiat dollar regime unravels, and it's always difficult to say when it's going to happen, but I think it's accelerating. Then a lot of that inflation that the US has exported is going to come home. And how does that come home? It comes home in terms of all the dollars abroad, and is going to create a massive inflationary collapse for the US, I would say, and the other Western countries that are allied to the US, not just militarily and economically, but also monetarily, especially a country like the UK. Just wanted to show you a book that actually my friend at MF, one of my good friends at MF Global, I got him involved in gold, and he bought a couple of books from Ralph T. Foster, had it signed. He gave me one of them to me. and it's actually signed for him, but he gave it to me because he got two, and it's this one here, Fiat Paper Money, The History and Evolution of Our Currency by Ralph T. Foster. I'm not sure if you can get this. It's not really, yeah, it's not really published by a main publisher. I think Mr. Foster did this himself. I'm not sure. But what's interesting about fiat currency or fiat money, he's got a list here of all the fiat monies that have become worthless, all the different countries and currencies. And on the back, believe it or not, there's even more. So this gives you an idea that paper money doesn't survive. Yes, the fiat dollar has been an exception, but I would say it's an aberration in a long history of where honest weights and measures should really, in my opinion, guide international trade and domestic economic activity. And hopefully we'll go back to that. And I think this is not just India and the U.A.E. that are doing this. It's happening all over the world. And there's a rush for for countries to have these bilateral agreements. I know China's done with other countries, so has Russia. And I don't think that's going to stop anytime soon. When the great rush to get out of the dollar will happen is difficult to say, but it could be very quick. And it could be, I don't know, it could be in 2023. Who knows? It surely looks like we're setting up for that. So let's look at where the markets are this morning then. It's 8:20 a.m. London time. And just wanted to say before I look at the markets, I did an interview the other day, I think it was Thursday, with Clive Thompson. He's a retired wealth manager based out of Switzerland, originally from the UK. And that interview has gone kind of viral for my channel. I usually don't get over 60,000 views on my videos. And there's a lot of you have asked questions, and we're going to have Clive on again sometime in December, and we're going to try to answer as many questions as possible, just to let you know. So right now it's 8:20 a.m. London time. We've got actually spot gold unchanged at 1755, right near the highs actually of the overnight session. The low has been 1745. So gold fairly steady here this morning. Silver is down slightly, about 13 cents at 21.32. Low has been 21.03 and the high 21.50. To the stock market, the Dow futures is down 1/3% or 100 points. NASDAQ 100 futures down 70 or 2/3%. The S&P 500 is down 16 at 40.10, down 0.4%. As I said, the Chinese markets, let's have another look. Yeah, they're down across the board. Shanghai was down 0.75%. China A50 1.6%. Hang Seng down 1.5. To the currencies, we've got sterling down 1/8% at 120.76. We've got the euro unchanged, 103.95. The dollar is down 0.75% versus the yen at 138.16. And the dollar is up 1/3 versus the yuan at 721.60. Quick look at the ruble. Yeah, the dollar is up slightly versus the ruble, trading around 61. Aussie dollar is down almost 1%, 66.90. The dollar is up 0.5% versus the Canadian dollar, 134.36. And the Kiwi dollar is down 0.5%, 62.15. So those currencies are down significantly versus the dollar. Not sure what's going on there. We'll have to look at it later. And to the general commodities. We've got WTI crude down almost 3% at 74.20. Brent crude is down 3% at 81.40. High grade copper is down just under a percent at 358, and US nat gas is down 3.6% at 704. So what's going on here? Well, maybe the commodity markets, the commodity currencies are forecasting some kind of global economic slowdown. I noticed that the yield curve in the US, for example, right now, the 10-year yield is down 7 basis points at 363, while the 2-year is down about 5. So we're continuing to see an inversion here. The 2-year, of course, is at 443. And that's a sign of economic slowdown usually. And with what's happening in China, as I said, I'm not sure how bad these protests are. Yes, we're seeing a lot of footage of what's going on there. A lot of people are surprised because they thought, well, the Chinese can't protest, but it looks like they can. And I don't know how significant it's going to be in terms of the political situation there and economic situation. But if anything, it could lead to the leadership loosening these zero COVID restrictions, which would actually be positive for the economy. Who knows? But anyway, if you enjoyed this video, make sure you hit the like button. Please share far and wide. Think about subscribing to my channel if you haven't yet. And with that, I wish you all a great day. Take care. Bye.